7th of August, and you're very welcome back to our next Founders Forum Insights. We are joined today by Niall McAvoy from Enterprise Ireland. Niall, very good to have you back with us. Niall has been on a couple of times already talking about government and Enterprise Ireland supports for HPSU companies around COVID. We've had some updates recently. You'll have all heard, notifications and things about the July stimulus. And so we thought it would be a good idea to get Niall back to give us an update on where things are at. So Niall, you're very welcome. The sun has come out. It's looking like it's going to be a nice weekend. Thanks be to God. So there's been a few changes since we last spoke about government and EI support. So do you want to just chat us through maybe the headlines of what those changes are and how they impact our cohort of HPSU companies?
Sure. So just to say, so firstly, the July stimulus package obviously has been announced since we last spoke, and there's also been some changes to the EU state aid rules, which have had a major impact on some of the Enterprise Ireland supports, COVID response supports.
Okay.
So maybe just at a headline level, and don't want to get too deep into July stimulus stuff, and maybe we can dig more into the specific company support. But obviously, look, the July stimulus was announced, 7.4 billion in tax expenditure and credit supports. At a high level, 2 billion for the credit guarantee scheme, which is covering amounts of 10k up to 1 million. The future growth loan scheme, which is administered by SBCI, which we've seen increasing number of companies of EI clients getting funded under SBCI. That fund has been increased to 500 million in supports. Obviously, SBCI is administered, the funding itself is administered by the pillar banks, but there's obviously a significant increase in funding there. There's significant increase in funding in the Restart grant of up to 25k per company administered through the local authorities with regards to rates charges. And particularly of interest to the small and to the smaller earlier stage HPSUs, an additional 55 million allocated to support small and micro companies through Microfinance Ireland.
Okay.
So that will see the Microfinance Ireland door opening up again to help those maybe companies that are at the earliest stage in the seed process, and even seed stage funded companies that maybe need a little bit of a top up, which would be relevant and appropriate for some of the supports that Enterprise Ireland is giving on the HPSU side. So that's at the high level in the July stimulus in terms of impact for EI clients, and particularly HPSUs, of course, which is my area. But looking broadly across supports for industry, there are changes to the temporary wage subsidy scheme that people will need to be aware of and make themselves aware of, as they did when the wage subsidy scheme first came out.
Yeah.
Always good to stay on top of changes and what it means for your business. But at a high level, the temporary wage subsidy scheme, as we know it, has been running heretofore, will be phased out and replaced by the employment wage support scheme.
Okay.
Now that will run until April 2021. It will run in parallel with the scheme it's replacing through July and August, but from September the new scheme will be fully in place. The amount of support that's there per employee is €203 per week.
Okay. So that's down from the temporary wage subsidy scheme.
That's down from the 350 number that went before it. There's the important that companies are aware of the fine print and the small print in all these things, and again, I would always say take professional advice from your auditor, from your accountant with regards to your engagement with these schemes. There is a requirement in the scheme that companies availing of the scheme need to be able to demonstrate a 30% turnover reduction. So be aware of that.
Because that's a change from the temporary wage subsidy scheme.
It was 25%.
Yeah,
was the published number. So that's gone up marginally there. However, on the flip side of that coin, look, companies can now avail of the employment wage support scheme, as it is known, for new hires and seasonal workers, for example. May now qualify, because previously it was only existing employees. But
so if they weren't on the payroll already before all this started,
at a prior date, and now if because look, people are cycling staff in and out all the time, depending on roles, and people move on and you have to replace them and stuff. So that's a sensible solution there. And just maybe one small point worth bringing out for Enterprise Ireland client companies. A lot of EI clients will be in support of grants, be they market discovery grants, feasibility study grants, any grants where people's time and cost is being
covered. Yeah,
is being covered. Okay. Now, with the wage subsidy scheme and now the employment wage support scheme in its place, when it comes to claiming those grants, it's important to only claim on the net figure. So if somebody's costing you $1,000 a month and you were getting $350 a month from,
you're only claiming $650. You're only claiming the balance.
The eligible cost per week for that claim for that person is the net number. It's not
okay.
It's not the gross number. So just bear that in mind anyway, because when you're doing grant claims.
So it feels like on that wage subsidy side, there is still support there. The support's being extended, but the detail of it, you probably need to dig into in your own individual set of circumstances, rather than us.
Well, as we've always said from the outset here, look, every company is different.
Yeah.
Some sectors hit harder than others. There will be points of interpretation, as there is always on these things. It is never these things that it's not just under COVID-19. I mean,
no, they're never black and white. Yeah.
Legislation. There's always points. There's always points of interpretation.
Isn't that why we have financial advisors and lawyers?
Professionals that our professional friends will dig into. To come out with that. So look, that's the temporary wage subsidy scheme. Are now called now the employment wage support scheme. Okay. I want to just dig down. Maybe it might be useful just to look at some of the Enterprise Ireland support, some of our COVID response, which we would have touched on the last time we were together, Emer. And there's one big change has happened since we were last together, and many companies that are looking in, particularly in technology and medtech sectors, sectors where companies often receive significant financial backing and venture backing and significant investment backing, and will continue to lose and burn money over a prolonged period of time as they scale their businesses.
Mm-hmm.
Under the temporary aid framework initially, under the EU state aid temporary aid framework that came out to allow member states to support their companies, there was a very specific clause in that relating to what was defined as undertakings in difficulty, okay, which is a rather broad brush statements to make, to try and describe every company. But it quickly became apparent, not only to Enterprise Ireland and our parent department, but also to other member states and our equivalent bodies in other member states, that actually in modern economies, which maybe aren't, where the business models and the scaling models are maybe different to how they would have been in some traditional manufacturing sectors of old, you actually have some very, very large and very successful and rapidly scaling companies
who are losing money or burning money,
pots and pots of money, and who fail this balance sheet test, and are therefore defined as an undertaking in difficulty. So you could have a company that,
even though they're not,
you could have a unicorn that's actually defined as an undertaking in difficulty, because they failed this balance sheet test. Anyway, long story short, loads of lobbying went on from member states. Enterprise Ireland, through our parent department, made strong representations along the same lines, and the Commission decided that they would remove this undertaking in difficulty definition to allow member states to support all companies that would have previously failed that. So it really brought in a lot of the tech companies, a lot of the ICT companies, a lot of the medtech, biotech, the ones that really are on big funding journeys. Okay, now how has that impacted on on our client base. Okay, so I'll just run through a couple of changes, right? So when we would have first talked back, a little bit back when this undertaking and difficulty was in place, there would have been a fair bit of noise around large groups and large cohorts of client companies not being able to get access to our sustaining enterprise fund. Okay.
Yeah.
And again, that was an EU state aid problem. So, but now that that's out of the way, actually, our sustaining enterprise fund, which is our offer of 100k to 800k in support, which is available for any company that employs, any eligible company that employs more than 10 staff at the date of when this crisis started, which is defined as the 29th of February in the legislation. Anyone that would have previously failed through this UID is now eligible. Okay, now that's brought a whole heap of companies into the net.
Yeah,
and we've seen a significant uptake across the board on our main SEF, Sustaining Enterprise Fund offer over the last number of months. And every investment committee, every week there's increasing numbers of proposals which are going to and getting support at our investment committee. So we've seen a lot of movement there, and some of that's down to the removal of the UID, the undertaking difficulty, and some of it's just down to, look, it took a lot of companies. It took some companies and their advisors and their investors. It just took them a little bit of time to get everything together in terms of getting the funding solution in place that they could then present to us for EI to play their part. So anyway, look, great news, significant uplift in volume.
That's great to hear. Yeah,
that are getting support. There are some other changes here that I think it's important that people understand under the main Sustaining Enterprise Fund. So again, in line with what we were hearing from industry and in line with what we were hearing from fellow member states and representative bodies across the EU, there was a strong sense that the solutions being offered across member states and indeed in Ireland at a local level for ourselves, having a high degree of repayability, are being fully repayable. Okay, might potentially create a bit of a debt problem or a debt bubble 4 or 5 years down the track, where a lot of this money would suddenly fall due, along with like the same time, for example, as bank money and other debt providers might fall due. So we wanted to look at making changes to align our offer with the needs of industry, bearing that in mind and bearing a lot of other factors in mind, right? So there have been changes made to the instruments that are used under Sustaining Enterprise Fund for us to support companies, right?
Okay.
And again, without getting into all the detail, because some of it can be quite complex, but to try and make it as easy and as simple to understand as possible, right? Up to 50% of support under Sustaining Enterprise Fund to a maximum of 200k, so up to 50% to a maximum of 200k, will now be in the form of, it won't be repayable, okay? So it'll be in the form of a non-repayable amount of money.
So if I got 400k under that scheme,
correct,
200 of it would be repayable.
Correct.
In the form of debt, and 200 would be grant-aided.
So 200 would be effectively grant-aided, and 200 would be either in the form of either be in the form of equity, or equity equivalent, or convertible debt.
Okay.
So it might be in a CLN, it might be in a pref, it might be in a convertible pref, it might be in straight up equity. Okay. But half and half. Okay. Now, just to put that in context, if, for example, somebody got 600k in support, or is applying for 600k in support, right? Okay, they will get 200 in grant stroke non-repayable.
Yeah.
And 400 in the form of
one of the other instruments.
One of the other instruments. Yeah. The reason I say one of the other instruments in a general sense is, for example, for some companies it makes sense for that 400 to be a non-repayable advance, okay, in terms of its balance sheet treatment, okay. But for other companies, there are some companies, for example, who actually would prefer it as equity in terms of its impact on the balance sheet.
Okay. So it'll be on a case-by-case basis.
On a case-by-case. But the big change, okay, there's a non-repayable element now, up to a maximum of 200k or 50%. Okay.
Okay.
So you take that in line with the undertaking and difficulty legislation being removed. Okay, some pretty big changes there from
Yes. Yeah.
from where we were maybe even 2 months ago.
Yeah.
So big changes there. Okay, bearing in mind again to everyone listening that the main sustaining enterprise fund offer, which is the 100k to 800k offer from Enterprise Ireland, you do have to have had 10 employees.
Yeah.
At the 29th of February. Okay.
So that does exclude some of the cohort of companies.
Some of the smaller, earlier stage funded HPSUs that we have, which segues me nicely into, well, what are we doing for
them? Yeah.
For our HPSU clients. Okay, so we have had, as you'll know, and as our HPSU investee cohort will know from talking to their DAs, we have had a sustaining enterprise fund HPSU offer, which has been specific to our HPSU investee companies, okay? And we have been rolling that out, going all the way back now to, I think, mid-April.
Yeah. This is the 50,000.
This is the 50k in the form of a CLN, okay? Where we're looking to see if the company can use that 50k to leverage an additional 50k, be it in debt, in convertible debt, or equity from other shareholders. And in every case, in every single case, that wasn't possible. But actually, off the top of my head, I'd say in 90% plus of cases that have been approved to date, actually, they did leverage an extra 50k, and they leveraged actually in plenty of cases more than
that. Yeah, I've heard a couple of stories of that too as well. Actually, yeah.
So the idea, so the availability of this EI money actually proved a great lever and helped our client companies to go to their other shareholders, and indeed to go to banks like Microfinance Ireland and SBCI and find, who saw us coming to the table and saw us as being part of the solution, and everybody decided, okay, well, collectively we can get together to support a company that is fundamentally still, the proposition is the same,
making the right tracks. Yeah,
the funding journey has now gotten now turned very different. Okay, so we've also made some changes to the SEF HPSU offer. Okay, again, caveat, rule number one: talk to your DA. Okay, always talk to your DA about the availability and how appropriate this offer is. Okay, but again, at a high level, just to try and cover off what are the changes to SEF HPSU offer. Okay. So the first thing is what was a 50k offer, okay, is now a 50k offer that is also up to a maximum of 75k. So what a base offer is 50, okay,
yeah,
but under certain criteria now that 50 is 75.
Okay.
The 50 becoming 75, a 75k offer is subject to the company raising 50k in matching funding. Okay.
Okay.
So any company that raises 50k in matching funding now, we will do 75k against. Okay.
Okay.
Now, by the way, that's not one for everyone in the audience. This is subject to
the usual,
progress against plan and all the usual stuff.
Yeah.
You have to be able to show that you were making progress and that this thing wasn't running towards the edge of the cliff on 100 miles an hour with no sales, no product market fit, no nothing, and give us 75 grand because we want to survive a bit longer. No.
Yeah.
That's why we always say talk to the DA. So we do obviously want to support all the companies that were making progress and continue to support our portfolio companies in the same way a lot of the VCs actually have done, in terms of they've doubled down on their portfolio companies to make sure, look, we need to make sure that these companies can trade out through the year.
The other side of it. Yeah.
Hopefully we start to see some light at the end of the tunnel. One other change to the amount, okay? So where 50k matching is now available and we're saying we're going to give 75k support to the company, that 75k support will be in the form of 50k in a CLN, as was the original offer.
Yeah.
But we're now doing an additional 25k in grant on top of that. So effectively, non-repayable money. Okay.
So similar to the kind of one for the over 10 employees.
Yeah, for
there's a non-repayable element being added into HPSU.
This is our equivalent solution for that. It's tweaked slightly differently. But our equivalent solution is, look, if you can find 50k in whatever form that might be, from existing shareholders, debt providers, yourselves, founders, whatever. I mean, if you can come up with that 50, and you're eligible to apply for this, we'll hopefully be able to get you an approval for 75k, of which 25k is non-repayable. Okay.
Which should be a lovely sweetener for people who are trying to convince existing shareholders to
Absolutely.
to support another round.
Go bang those doors down on your existing shareholders. They've all
Yeah.
written significant checks. They've written significant checks to get this far. Now is not the time. Now, look, we all understand there are some shareholders, particularly, friends and family and stuff, maybe that are, that get tapped out quite quickly. But where you're dealing with shareholders that have the wherewithal to come in and play their part in making sure the company can progress through this crisis, and with EI providing this, as you say, is this you call it a sweetener, but this great incentive to keep the company moving forward, or to at least sustain the company and give it a chance of moving forward. Absolutely go and talk. And if any of your investors or any of the investors out there want to talk to Enterprise Ireland about our position on supporting a company, the DA will always take a call from investors. We talked with the investors at the start of the process, where we all try to make sure we're aligned. And if an investor wants to pick up the phone and talk to us now and sort of say, look, just confirming that you guys are actually good for this, and here's the amount, and here's what other supports are you providing, and can you provide for the company, make that call. Always up to it,
Okay.
At the end of the day, we're all us investors are in it together. Enterprise Ireland don't view it. We don't view ourselves as investors in the traditional
sense. Yeah.
We're a development agency, and we have a much broader agenda than the return on our investment. The return on our investment is something that happens by virtue of the fact that we do co-invest, but we, there's a wide range of supports outside of equity supports, in terms of market discoveries and key managers and category 1 and feasibility supports, and graduate, grad starts, and a whole range of stuff that many of our clients will have availed of already. And just to say on that as well, Emer, we have done a massive amount of these supports already this year. We're running way ahead of the whole year last year. Actually, even at mid-year this year, we're running way ahead of a whole year last year. So it's not just the sustaining enterprise fund stuff. I mean, we really are pushing the boat out to try to provide support across the board.
Across the board, yeah. Okay.
Yeah.
So Niall, if I can just recap, I guess, just a couple of things we've got. So temporary wage subsidy is being extended or morphing into a new guise and being extended into April 2021. Go check that out. The undertaking and difficulty clause, which was causing lots of companies to not qualify for SEF, has been taken away. So now that scheme has opened up. And then the SEF for the HPSU companies has also been slightly restructured, in the sense that we're now forming this, including this kind of grant aid piece, if you like, of non-repayable money. Okay. Anything else final in terms of changes you think it's useful for our founders to be aware of, or are we?
No, I think we've covered. I mean, at a high level, I think we've covered. I mean, look, in terms of a general commentary on what we're seeing, and what we've seen year to date out there, because I was only having this conversation with Tech Ireland a couple of days ago. H1 has been remarkably robust, I would say, actually, in terms of new HPSUs and new deals out there in the market. Probably because a lot of them were in the pipeline,
early on.
Right. Okay. We've done more follow-on investments in H1 this year than we did in all of last year. And that excluding SEF, right? Okay.
Yeah.
We've done more HPSU follow-ons this year, so H1 actually, there's been a lot of investment and a lot of activity going on, look, we are facing into H2, and we know that the availability of private capital has,
it's got tighter.
Yeah, it's getting way tighter, right? So while we haven't seen the impact of that as much in H1, maybe as we might have thought, I'd be fairly confident we're going to see the impact of that in H2. But look, EI will continue to try to fill as much of the gap as we can. Try to be flexible in terms of our approach to investing in new startups in particular. We've approved recently quite a few new startups that are in sectors that are in, we've supported quite a few new startups recently that are in sectors that are really massively COVID impacted. Because we want to show support for good technologies, good founders, and good promoters. That the funding journey may have changed.
Yeah.
The timelines in that journey, may have changed, and they're going to have to cut their cloth maybe a little bit tighter in order for when to be ready for when the market does hopefully rebound in some of these sectors. But look, we're continuing to back companies on the same basis that we would have always backed companies, and that is, good teams, strong domain knowledge, good market opportunity, a value proposition that's clear, a little bit of product market fit that can be demonstrated to us, okay? And we'll be there, to support those companies, and we'll be there to support them with alongside other investors, friends, family, and anyone else who's coming to the table. And look, continue to have those discussions with us on that. And if I can, Eamon, I hope you don't mind, just a little bit of a plug.
Plug away, Niall, plug away.
the HPSU team, the development advisors across the team, across the entire HPSU division, and in fact outside of HPSU and established and accelerated core and other parts of Enterprise Ireland, have been doing a phenomenal job, a phenomenal amount of heavy lifting to deliver on the sort of numbers that I spoke about in this in this little piece so far. So across the board, the numbers and the metrics, are substantial, and that's down to the performance and the delivery and the commitment
of all those individuals.
Of all those individuals. So a massive call out to those people, and indeed to all, not just the DA community, but all of the staff, all of the wider people, because it's everything from from legal to grants to policy to to payments to research and innovation. Everybody is all hands to the pump, and the phenomenal effort from the team so far.
Yeah, super. Niall, thank you so much for your time today. It's great to hear that what's really interesting to hear is the fact that the supports are evolving in response to the needs of the companies, and obviously these are unprecedented times, and lots of the supports were put in quickly to try and get something moving, and it's great to hear that they're evolving to be more fit for purpose as time goes on. So listen, thank you very much. It's Friday afternoon. Go enjoy your weekend, and thanks again for your time.
You too. Thanks, Eamon. Good to see you.